This John Lothian news video is sponsored by When exchanges look at growth areas, Asia gets top ranking. The Singapore Exchange has positioned itself as the Asian gateway for the international trading community for more than 30 years. Muthukrishnan Ramaswami, president of SGX, spoke with John Lothian News about the exchange's growth, its dominance in Asian indexes, as well as the potential for other asset classes including FX and commodities.
2014 has been a year of good growth for us on the futures part of the business, where we've seen, I think, an enormous interest in the Chinese contract. It's more than doubled its volumes over the last year. We've also seen an enormous amount of growth on the iron ore clearing that we do, as well as on the futurization of the iron ore contracts. And in the same context, I think we also finished with all our registrations in the CFTC's new regulations, as well as the ESMA and compliance with all these regulations in both Europe and in the US. So I think, therefore, it's been a year of stabilizing into the new environment and a year of significant growth on the futures for us. In terms of technology, we continue to be predominantly on the Nasdaq OMX platforms in our futures marketplace, and we are currently in the process of going on to the newest release of their system set. What that does for us is takes us closer to a 24-hour operating day, maybe a 23.5-hour, more than a 24-hour. But having said that, it is enough to cover the markets that we want to cover. And the second big thing that we are investing in is developing a customer front-end solution, which I think is something that the Asian marketplaces need, and we will be spending our money on that in the next couple of years. So the next thing for us is the move to the newest GNM platform that Nasdaq OMX has, as well as to the front-end platforms as we start to develop them ourselves. We started off purely as an interest rate derivatives exchange many years ago, but from that we moved on to equity derivatives. We cover almost the entire Asian suite right now. And then now what we've done in the last couple of years is added the FX suite that goes with that. So our current growth really is FX focused, where we have a contract that supports pretty much all the equity derivatives we have. The other area is commodities, where we have seen the trade in commodities in Asia grow humongously, and our role in that in terms of clearing contracts that go into and out of China has been a big growth area for us. That's mainly in the iron ore context. And in the context of commodities, iron ore is the second largest commodity traded in the world after oil. Therefore, to have a significant role to play in that, we think is good for us in the long run. SGX is well positioned. I think our futures continue to grow. We've grown, compounded average rates of over 25 to 30% over the last 4 or 5 years. We've had such challenges more on our securities marketplace, where volumes have been either up or down based on the year. But on the futures end of our business, we've continued to see steady and strong growth over time. And I think that is a reflection of the need for risk mitigation instruments in the Asian context, which wasn't well developed. And I think it'll continue to develop. I think we are still in the early stages of that. So you will see the use of hedging instruments grow in Asia. And as that grows, our futures, options, derivatives businesses are well positioned to grow.